Dan, you pulled numbers again, right?
Yep, I got everything through November. So
Yeah. It's funny how fast that happened, but lay them on me. I appreciate you always doing that, man. I really do. What you got?
yep, happy to do it. Yeah, we're kind of getting to that time of year where everything moves real quick with the holidays and all. But yeah, so let's see, what is that? Not September, November. November finished down 13% month over month, but only 6% year over year. I think when you look at the chart, I mean, this is really consistent with what we've seen in the past. We have inventory of over 2,500 houses that are active today, which represents almost 1.5 months of supply. So not a huge surprise, right? That things are kind of closing down for the year. If you're a buyer, I think say this is usually a really good time to buy. Nobody likes to move in the winter, but the competition is less. So that typically means that, you know, with the increased inventory, you have a better chance of getting into something.
Yeah, that's one of those. It seems like there's increased inventory, but I think it's a matter of, I don't know how we can track how many homes came on, last month. It's going to be less than whatever comes on in June, right? So there's trade-offs with that, but if we see the rate drop that we're expecting, that's going to be a big deal. And we should talk about that at some point. But let's run through numbers again because I haven't seen them yet.
So yeah, so 1,751 homes were sold in November, and again, that's down just 6% from last year. You can see the trend last year was that we decreased from November down all the way through January before things really started to pick back up again. List price versus sales price, I don't know, not a big surprise here, right? Again, things kind of tapered off a little bit. You can still see that after the crossover back in like August, the sold price is coming in lower than the list price. And again, we think that's just an indication of less competition in the market.
Yeah.
If you have 5 people or more bidding on a house, things tend to go above asking. When you don't have that, things tend to go maybe at or below. So I think that's really what we're seeing here on the chart, which is pretty consistent with the last couple of months. The notable thing, though, is if you look at this November compared to last year, we're up in terms of the sales price by 7%, which is about $24,000. So again, that's a theme that's been really consistent for us this year, that even though things have maybe cooled off a bit, the prices have continued to be up, I think, every single month where we've pulled these numbers year over year.
Yeah, that's wild. The bubble's not bursting like everybody expected. I feel bad for those people that kind of cashed out early and are missing this wave of equity. And I mean, that's just bad luck, right? Anytime you try and time the market, it's a gamble. So not surprised, especially with the situation that we're in. So I heard this phrase the other day on social media, one of the social medias, that a lot of homeowners are stuck in golden handcuffs. Have you heard this before?
Yeah, I've not heard it in that context, but yeah, familiar with golden handcuffs, basically. Yeah.
People want to move, but they have a 2 and 3% interest rate, and it's just not worth it for them to move. They have a ton of equity in their house. They got all kinds of motivating factors to move, but the rate keeps them there. That's a tough place to be, but it's actually not a tough place to be. Let me clarify. Okay. It's a good problem to have, I guess, but that's affecting our supply a lot, and that's changing the game for us. So we'll keep going through the numbers, and then I want to talk a little bit about what to expect this summer. So what else we have here?
Yeah, I mean, I guess the rest of this is pretty consistent with what we saw last year. Days on market, things moved up just a little bit from last month. But again, if you look at last year, this time we were at 22 days on market for the average. That's where we're at, in November of this year. 8 days is the median this year versus 9 days last year. I mean, that's just really pretty much the same. The other thing that's changed over the last few months is, again, as there's been less competition for the houses that are available, you're starting to see that the percentage of homes that are going 5% above asking is trading with those that are going 5% below asking. So really, if you've been paying attention to this chart like we have been for the last 6 months or so, that blue section in the middle, things are 2/3 of things typically go pretty close to what they're listed for. But it's that over and under piece that have really been changing hands over the last several months. We expect that that trend's going to continue until things rebound and pick up again in the new year.
Yeah, and until we track those numbers, man, I know that there's a seasonal difference. We've always known that. That's the advice we give our sellers, right? You got to do something early October at the latest, otherwise the market goes dead. It's shocking to me just how much when you quantify it, when we actually look at the charts and the numbers, how consistent that is year to year. Again, not surprised. I am a little surprised that the rate isn't having more of an effect on this kind of thing, because it seems like we're in line with how we were doing before, as expected, and we're fully 2 points over where we were, 18 months ago, something like that. So that's a little surprising. The rate isn't doing more, but it's affecting overall sales. So other metrics, what we got?
Yeah, I guess the last two here are, the percentage of sales that included a price reduction is up to 28% versus 25% last month. This time last year, we were looking at 30%. So again, I think that this is a very typical seasonality, not a lot of change here or surprise. And then the last piece, like you mentioned, you alluded to, was the mortgage rates. So we started to see this little bit of a trend over the last month or so where things have kind of come down a bit off the peaks that we saw. The data that we have at the end of the month was a 7.22 rate for a 30-year fixed mortgage from Freddie Mac. That was the data that we pull from each month. So yeah, things are starting to trend down a bit. And we've heard some chatter, some news recently about forecasts for next year. And I think that's probably the thing you wanted to talk about, right?
Yeah, for sure. That's so you have the sources, but I've been hearing this a lot from bankers as well, Union Home and Revolution Mortgage. A lot of people are expecting, also on the news, all the pundits, a lot of people are expecting the rate to drop down to close to 6 by the end of next year. That's 1.5 difference, as far as we're concerned. That's a multiplier of what, 80 cents per thousand. It's a lot. So at the end of the day, $100,000 home. Is my math right? That's $800 a month less by the end of next year. Okay. Now that's great, and everybody's been waiting for that. All these golden handcuff people, right? Because people have reasons to move outside of the rate. We need to talk about what to expect when that change happens. And that's a big one, because right now, like you're saying, we're seeing things go out or below. There's possibilities. Some things still go above if they're good enough, right? They're priced appropriately, even at 7.5 to 8% interest rates. So when they drop to 6, all those people that are waiting are coming out. The people that have been saving their pennies and all that, and that's the end of the normal buyer's market, normalization of the buyer's market that we've been seeing. Okay, it's a big one. So what does it mean when the rate goes down? If it goes down 1.5 points, it's going to cost you an extra, I would guess, $50,000 to get into a house, because there's going to be so much more competition. People are going to be moving. You have to come up with cash up front. I don't know which one is better. Okay. So it depends on your situation, obviously. If you got a bunch of cash to burn and you just want that rate locked in and not have to mess with a refi, great. You can wait and be a part of this upcoming frenzy that's almost assuredly going to happen. But for my money, man, with the way that the market's been moving, I kind of feel like if you're in a position to get in a contract now, lock something up now, you should do it now, and then avoid all the price over asking and multiple offers and all the concessions that buyers have to make. It's a lot easier to get it now before the rate drops than after the rate drops.
Yeah, and I think that's a great point, because what we've said a lot lately is you can always refinance the rate, but you can't refinance the amount that you borrowed, right? So you can't go back and say, well, I bought the house at 500,000. can we refinance the amount that I owe you to 450,000, right? It's just, that's not how it works. Both affect your affordability, but the only one you can really influence in the future is the rate. So I don't know. I think that you're right. There's a lot of pent up demand. Once all that hits the market, there's still not enough supply. We've seen that. We saw that all this year, really, that there's just not enough supply, especially with people with the golden handcuffs kind of keeping all of their inventory on the sidelines. But even before that, the reason the prices were so high and that you had so many multiple bids and people going above asking and you had waiving of contingencies was there was not enough supply in our market to satiate all the demand. That's not really changed all that much, right? There's been a lot of new building, but there's also been a lot of new people attracted to the market. So I agree with you that as soon as the rates start to drop, and I mean, I've seen some things even that talk about not just 1.75%, but maybe 2.75%, which is huge or huger, right?
Oh, man.
And it's hard to imagine that we're not going to go right back to that frenzy mode where, multiple offers, you're lucky to get your offer selected. You got to come all cash. It's just going to be wild. So, I mean, if you're a buyer, that's terrifying. If you're a seller, that's great, right?
Right. It just depends on your situation, obviously. But, if you're coming into the market, which Central Ohio is seeing a lot of growth, we've been hearing about that for maybe years now, if not months, about how the Northeast and Eastern section of our city is growing. There's a lot of industry going out there with the CHIPS Act and all that, with the Intel plant. It will explode. And for now, at least, it's still affordable relative to some other metro areas, at least bigger, developed, what we'd consider nice areas. Ours is pretty solid. I like it. No complaints, but it's just a matter of can builders, meet the demand that's going to come. So that's another thing to think about too. I actually heard on Marketplace, the radio program that I listen to, they cited October sales as being up overall, which is not what we saw, by the way. And here's why. They said that the contributing factor was new builds closing in October. There's such a large number because, if you go 6-7 months before that, April-ish, March, there was no inventory and people wanted to move, so they built. And those started to get closed down in October. That's great. Back in April, March, we were looking at maybe the low sixes interest rate again. So builders started ramping up inventory. Right now we're at 8. They are not ramping up inventory. So just be aware that when the price drops, the interest rate, if that happens, there will be a delay on a build. But that's still something to consider. That's still not a bad idea. Okay. If you get into something now. So nobody wants to move in the winter. We've established that. The holidays are coming up. People have other things on their mind. You don't want to put your mittens on to move, your whole life to a different house. If you were to consider building, that's going to be done by warmer months, at the very latest next fall, right, in October again. So this is a plan for the future. If you would consider building, that's probably a good move to at least look at it now. And because of the demand from the builders, they have started ramping up inventory, at least in new neighborhoods previously. So we're going to expect to see that slow right when we need it, when the rates drop the lowest. So just be aware, that's an option. It's a good one. I think that's the only way to grow this city as much as we're gonna need. So we'll see how that shakes out.
So if you were a betting person looking at next year,
Yep.
Would you be betting on higher or lower prices?
So way higher prices. Prices come with the demand.
Would you be betting on higher or lower interest rates?
And I'm going to bet on lower interest rates. I really do believe they'll go down. In this little series that we do, man, we've been talking about this. I was kind of like, when the rates started creeping up, I was saying like, this is not bad. That's normal. 5% still great. 6%, I remember that. It's great. 6.5%, I'm like, that makes sense still. For the level of the house to the payment that you get at 6.5% makes sense still in Central Ohio. we started creeping up to 7.5, 8. I was like, whoa, that's too high. So, and I kind of think everybody feels that way. So once it starts creeping back towards the low 6s, it's almost like a release of some of the golden handcuffs, as we'll say. That we have to come up with a better term for that because that's an odd way to say that. But the stickiness that the lower rates is having on sellers is going to decrease a lot as soon as we hit right around that 6 mark. And everybody's projecting it to happen, so we'll see. Obviously, it's still a gamble. We're still trying to time a market if you're making moves for that. But I will say, I think for my money, it's better to get something before the rates go down and not put as much up front and not pay as much in the end price and then refi later. That's the advice people have been giving all over the place. I don't know that everyone understands what that means, but it's easier to buy a house now and it's cheaper than it will be 6 months from now.
Yeah. That's the readout at this point, right? I mean, you've got a lot less competition. It's more likely that you can have an offer that includes contingencies for inspections and repairs and all the rest of it, right?
Yeah.
Financing. Those were things that were just unheard of during the frenzy. So, yeah, that's it'll be interesting to see where things go. I mean, this is why we check in and month out. Things changed a lot for this month.
Yeah. So I will put this out there. Because we've been tracking seasonality so well and you have those numbers, when are we going to start seeing the uptick again? Is that March, April?
If history repeats itself,
Mhm.
we started to see that the bottom was in January. It went down from December.
Okay.
So it would not be surprising to see 1,200 to 1,300 houses sold in January of 24. That would be consistent with last year. And then immediately things started to rebound. February was up, March was way up, and then the trend line continued up pretty much all through the summer, June being the peak. Yeah, similar the year before. So
Yeah, my main concern with that trend line is the sales price over asking price. When did that metric cross over? Because we have a hard date on that, and I feel like that's pretty consistent year over year. So
yeah, so that met. They were pretty much even for March and April, and then crossed over for May. So
okay,
the typical
so
kind of spring to summer buying season.
right. So again, I mean that's been consistent with our rate changes over the years, over this past set of months that we've been tracking. A couple years worth. That's been consistent regardless of the rates. I'm going to expect that to be consistent again. So if you're going to take the message of if a buyer is looking into the market by March, April, for sure May, by March, April, you can expect to be done getting under the asking price. And of course, it depends on the house, but your likelihood goes way down after March, April. So just keep that in mind. Obviously, nobody wants to move in the middle of that, but there's other factors. You can push out possession for a couple months till it's warmer. If you build, obviously, that's going to be done way later. By the way, build lead time right now is 6-7 months. That's been pretty consistent here. Okay. If we get this rush, you can expect that to go to 9 to 10 months. Make that a factor too. You might end up moving in the winter anyway if you don't time it right. So a lot of interesting factors in play, but I like the idea that we're tracking when the market shifts back up, and I think people should know that if they're going to be buying. So
yeah, and I think it probably tells you something as a seller too, right? I mean, if you know that you're going to be selling in the spring or in the summer, now's your time to start getting your ducks in a row, start purging, start doing some of those repairs that maybe were put off. Maybe do some upgrades in certain places where you're going to get a return on your investment. That's the kind of thing that we're happy to help with, just in terms of recommendations. But you're going to try and hit that mark, right? May, June, July, those are peak times for you to get the max for your sale. And that's what we see, at least for the last few years here as we've been tracking this. So,
yeah. It's great insight, and I really appreciate you always pulling those numbers, Ben.
Yep, happy to do it. We'll see you next month.
Okay, buddy.